This is the CRE Weekly Digest by LightBox, a firm transforming the commercial real estate landscape by connecting every step of the CRE process with comprehensive tools and data. I'm this week's guest host, Molly Farina, sitting in for Alyssa Lewis, who's in sunny Aruba this week. I'm joined by our experts, Manus and Dianne Crocker. For today's episode, we have a very special year in review edition. But before we get to that, it's been a pretty busy news week, so let's dive into the highlights. After this week's Fed cut, jobs report came out with a very low 65,000 new jobs created in November and unemployment up to 4.6%, its highest since 2021. Oil prices slid, which should help the inflation rate. Retail sales data from the census shows flat October sales, suggesting a downshift in consumer spending. Treasury yields didn't move much this week, hovering around 4.18%, still well above where we want them to be. We also have the CPI report for November coming out later this week. Manus, what's your take on this week's market news?
Well, people like to talk this time of year about a Santa Claus rally. They like to go into the new year with optimism. Often that is reflected with stocks raising to new highs and all kinds of optimism in the new year. We really didn't get any of that this week. This was more of a Grinch, the opposite of rally week. All the news was generally disappointing. The jobs number of 65,000, while above expectations, were above really puny expectations. Nobody wants to see us living in a 65,000 new job creation world. We like 200,000, 300,000. That's a sign of a growing economy. We saw that 10-year Treasury yield, as you mentioned, Molly, still hovering at that 4.18%. Twice in the last couple months, we've cracked that 4% barrier for a short period of time. But lately, we've been moving upwards, and that's not constructive to anybody. We saw crypto sell off again this week. Stocks in the U.S. trading off from their highs. Tech has been especially hard hit recently as people are starting to question the depth and the payoff of the AI rally. So generally speaking, a Grinch of a week. I prefer the Santa Claus weeks, and hopefully we see some of that before year end, but who knows? It's choppy.
Yeah, I'll jump in on that, Manus, and second that assessment. Certainly the big headline this week was the very soft jobs report that got a lot of headlines. It got at what Powell had hinted at after last week's rate cut. The labor market's bumpy, it's softening, it's increasingly a concern. But, let's just remember, I don't think the Fed is likely to put much weight on this week's jobs report, just given the data disruptions post-shutdown. Powell said last week the report would likely be affected by distortions because of the shutdown, pointing to the fact that it could be a less reliable gauge of the labor market's health than usual. So I'm curious about what the next one says. The report on December's employment data will come out early January, and that will be right before the Fed's next meeting and the first meeting of 2026. So I think that'll be a more meaningful, hopefully a more positive indicator for the Fed when it comes to deciding about the next potential rate cut.
And when you talk about distortions, one of the things that came out in the last week or so is the Fed is going to reinstitute the buying of securities, $20 billion a month, which for those that are tourists in this space, we talked about it here at LightBox in an internal meeting, when the Fed is buying treasuries, what they're trying to do is reduce supply. When you reduce supply of anything, they become more desirable. More desirable in the case of treasuries means the same number of people chasing fewer goods, and the theory is that will push down bond yields. Now, there's two elements of this. One is we like the idea of lower bond yields. That's constructive to CRE in general, but we don't like distortions. We don't like when people play games to manipulate the curve. We like it to come to its natural resting place just organically. So I'm not sure how I feel about this. I'd like the lower rates, but we saw what manipulation in terms of QE, quantitative easing, did in 2021 and 2022. It led to bubble-like conditions, and I'm not sure we want to go back to those types of manipulations.
I'm so glad that you brought that up, Manus, because it reminded me of something that I wanted to tell you and our listeners, that if you don't follow Ryan Severino at BGO, he just posted a very funny take on the Grinch, and it specifically talked, Manus, about attempts to manipulate markets, and the who's down in Whoville were ignoring that and just kind of sticking to basics. And it's a very funny, very clever rhyme that he just posted. So definitely check that out.
One of my fondest memories of college, and this is going back many, many years, was you could always expect the fraternity basement to be packed if there was a big game. The NCAA finals, the Super Bowl, the TV would be on, and you couldn't find a place to sit at those moments. Everybody wanted to watch the big screen TV, which was very new when I was going to college. There weren't that many things, and they cost a fortune. But the other time that you couldn't find a seat in the fraternity basement was when the Grinch was on. Right before finals, everybody would get on those couches, listening to every word and just cracking up. It didn't hurt that the creator of the Grinch went to the college that I attended as well. So that added to the fondness of that, but it was one of those college memories that will endure forever. But we should move on. We have a lot to cover this week. We're doing the year in review. And Molly, I'll let you tee us up for that.
Yep, let's get to the meat of it. So this is our year in review edition, and what a year it has been. Manus and Dianne, let me just ask you first about the macro environment this year. What are two things at the macro level that surprised you most?
Well, let me start by welcoming Molly. I should have done that in our open. This is her first podcast filling in for Alyssa. We have been very lucky here at LightBox. Everybody who steps in just seems to be a natural at it, and a great start for Molly. Before we get into the surprises, I wrote this up this morning, a little bleary-eyed, so I'm going to take my co-host here maybe today a little bit by surprise. But in my prior career, when I wrote a lot of research for the CMBS market, I would talk about the good, the bad, and the ugly, kind of channeling Clint Eastwood's 1960 Western movie in doing so. If I could take it from the top down before we get into the macro and the CRE side of things, the good, new high for stocks this year. That was a nice surprise, especially coming after the tariffs were announced. We saw a big rally driven by AI. Everybody likes when their portfolios are getting bigger, when stocks are going up. So that was part of the good. There was also hopefulness in the Middle East that we may have peace, and maybe in other areas, maybe in India and Pakistan. And peace is always desirable and always a good thing. And that was one of the highlights of 2025. The bad, not a lot of movement on bond yields, a big sell-off in crypto. The office market remains deeply in the discount bin. The problems in multifamily have taken longer to work out than we anticipated. I would put that all in the bad category. And in the ugly, way too many stories of violence and tragedy. Some were random acts of violence, and that happens every year, but far too many stories of premeditated actions fueled by ethnic, religious animus. And that was a big disappointment in 2025. And we hope that, I think I'm speaking for Molly and Dianne, that we hope that 2026 brings more peace and more level-headedness, a cooling off of people around the globe on this front. So that was my throwback to my early days when I would do a good, bad, and ugly. I've always been a big Clint Eastwood fan, so that was easy to dust off for me. But I will start with you, Dianne. Let me go in and ask you, we'll take it from the top. We'll take it from the macro, the big economy pictures of 2025, and then we'll dig deeper into CRE. Tell me about what was your biggest surprise in 2025 at the macro level.
I loved that opening, Manus, the good, the bad, and the ugly. And I've seen that Clint Eastwood film. And thank you for the ugly in particular, because I think the news on the violence front is very top of mind for all of us this week after what happened in various parts of the globe last weekend. But I think, in reflecting back at 2025, I went all the way back to January looking at some of the topics of the podcast and the content that we've created and Lightbox data. And I think just at a very high macro level, one of the biggest surprises for me was just how bumpy the road turned out to be. We came in like after holidays last year, after New Year's, with these forecasts of a better year. maybe not a banner year, but certainly, expecting a nice, soft, clean landing where inflation may be moderated, steady growth, gradual Fed cuts. And, what did we get? We got a labor market that seesawed from month to month. We got sticky inflation, housing and energy prices all over the place, and rate cuts we didn't see until September. And the policy announcements that were dropping on social media with no advanced warning. We had aggressive trade policy changes. We had threats and retaliations from world leaders. And it just created so much uncertainty where everything looked stable 1 week on a pod. The next week, the outlook got all scrambled and, oh, wait, things are fine again. And it got me thinking that one of the things I did this year, and it was partly in response to forecasts about tariffs pushing up the cost of cars, is that I traded in my old Subaru that had very high mileage and, let's just say, not the bells and whistles that new cars have. And so now I have this thing that's very new to me, which is driver assistance technology. So if I drift too close to a lane divider, it vibrates my steering wheel. And it got me thinking, like, that's basically been the macro economy this year. These little kind of course corrections, these little jolts, these little alerts telling us that we're veering off track. So I'm hoping 2026 is a smoother ride, still moving forward, but staying in the lanes without those herky-jerky bumps that we saw.
It's funny you talking about cars with bells and whistles. Even though I'm not young anymore, I still think the two greatest things that come with a car are air conditioning and FM radio. As somebody who grew up driving in cars with only crackling AM radio and no AC, and you'd get into the car coming from the beach, and the leather, it wasn't even leather, it was pleather that was on the car seats would scald you. I still am just the happiest guy with the new car smell, FM radio, and air conditioning. If I have those three things, I feel like I'm driving the greatest car in the world, regardless of the sticker price or the curb appeal that comes with it, I have to say. So fond memories there. I have two surprises. I'll start with one and I'll throw it back over to you, Diane, before I get to my second one. My first had to do with tariffs on several levels. The first is, even though President Trump had run on instituting tariffs, I don't think anybody had any inkling that he was going to roll out the levels that he rolled out in early April. I think that took a lot of us by surprise, even those that had been following his rhetoric. And then even bigger was the fact that we never saw, to any meaningful degree over the last 8 months, this hyperinflation that so many were expecting. And that's a good thing. A lot of people were saying this was going to immediately push the prices of everything up higher. It was going to be a recession, if not a depression-making turn of events. And what we saw was, yes, some gradual inflation, and certainly in some areas we've seen some sticker shock, but by and large, the uptick was measured and gradual, and for that, it was both a big surprise and a welcome revelation of 2025.
Agreed. I think the news cycle this year was crazy, and especially on the tariff front. And that triggered all of those announcements on tariffs, triggered these hyperbolic headlines about inflation, about prices of cars, which I just mentioned. And it was just such a dizzying pace. So yeah, I agree that the fact that we haven't seen a dramatic increase, certainly not to the extent that was forecasted, is certainly a relief. But that was a pretty mind-numbing news cycle on the tariff front this year. For me, the second macro surprise besides the bumpy road was just how long it took for the first interest rate to come. Now, I say that knowing that the same thing happened last year, where New Year's 2024, everybody was predicting 5-6 rate cuts by mid-year, and we didn't get one until September. And then lo and behold, that's exactly how 2025 played out. There were forecasts of rate cuts in Q1 or Q2, and instead, Fed Wednesday after Fed Wednesday passed, and we didn't get a cut until September. And then it was just a very small 25 basis point cuts. What was surprising was how resilient, and I know we're going to talk about commercial real estate in particular in a second, but it really didn't stall, I don't think, the way that a lot of people feared. Our industry has adjusted to rates being higher for longer. Our LightBox CRE Activity Index has stayed in the triple digits for 9 out of the past 11 months, and that's without meaningful rate relief not coming until September. So, the market stabilized and it kept functioning. But that, my surprise of 2025 was that we didn't see a single rate cut until September.
My second one is another positive one, and that is really the epic rally we've seen in equity prices since April, or I guess really since May. April saw a big sell-off driven by that tariff news. We saw a staggering rally from May until really right now, or at least until the last 2 weeks, driven by AI optimism. All of the major indexes, from the NASDAQ to the Russell, all hitting all-time highs. And that really took me by surprise. I thought the combination of geopolitical uncertainty, interest rate uncertainty, tariff news, all of that would lead to more of a sideways type of equity market in 2025. I think I've been saying since July, since earnings ratios started hitting historical records, that the market felt frothy, and it never really sold off until the last 2 weeks. We've seen this steady climb, and that surprised me. I'm happy for people. Their 401ks are flush right now, and that's wonderful. It still feels a little frothy to me, but certainly my second big surprise of 2025.
So, Manus, do you have any stock tips for our listeners at year end?
Well, I have to say that I'm not adding to my positions at this point. Things do feel very flush, if anything, and I'm not one to give out stock advice. I happen to like things like mortgage REITs, high dividend stocks, defensive things right now that are not at the frothy levels we're seeing in tech right now. I think tech is a little healthier since we've seen some sell-offs, but I'm alarmed by a few things. I'm alarmed by the amount of spending that it's taking to move this along, not only the model development of these AI models, but also the amount of money they're spending to develop data centers. That's really staggering numbers. And as we saw in the late 1900s, that the line from the promise of the internet to the profitability of the internet took a really long time, and there were a lot of casualties along the way. A lot of companies that raised money ended up going out of business before the likes of Amazon and others really nailed it. And I think that that's going to be the same with AI. Not everybody can win, and I don't think it's a straight line between where we are today and massive profits. So I don't like to be a downer around the holidays, but I do think that there'll be some disappointment at some point over the promise of AI before it really gives us everything we hope it will be.
So we've covered the macro level surprises this year. Let's drill into commercial real estate. What surprised you about the commercial real estate market in particular? If you can give me 2 things.
So you mentioned office briefly, Manus. My first surprise this year looking back is office, not because it boomed, but because we didn't see a collapse in office like a house of cards the way I think a lot of people were forecasting. Certainly distress has been slow to unwind. Lenders have been more patient, I think, than some folks expected. But we saw in a handful of metros that leasing actually broke records. Metros like New York City, like San Francisco, broke leasing records this year. So it wasn't a boom by any means, but everywhere we looked, there were these little pockets of progress in office, even in markets that were left for dead. So I look back at our Lightbox data, office listings this year in our platforms also track not just the number of listings, but how many interested parties are coming and looking at those listings, how many are signing viewed agreements so that they can kind of kick the tires and look at listings. So in the office sector in particular, there was an average of 118 viewed agreements per listing. It was well below multifamily, which is the highest interest at an average of 218, but it was still a jump from office listing interest, which was an average of 74 in 2023 and 84 last year. Now it's 118. So interest is clearly rising. On the deal side, our transaction team logged nearly 2,200 office trades totaling $46 billion. They were not all distressed. They were not all discounted, but certainly not the freeze that many had forecasted. So I don't want to overstate it, Manus. Obviously, the bar for improvement was pretty low, and office certainly is facing very serious pressures, not just from the new work from home dynamic, but also the backlog of buildings that really have not seen a lot of love in a long time and don't have the amenities that a lot of office tenants want. But I think the slow recovery took hold in a big way this year.
Before I get to my first surprise, and I do have three, but before I get to that, I do want to talk about the office for a second, because if you spend any time on LinkedIn or Twitter or anything else where people are commenting on the state of the market, there is a lot of pearl clutching. There is a certain percentage of the populace that believe that the world is perpetually ending. In some cases, they're rooting for disruption. They're rooting for things to go down. They're rooting for bad things to happen, which I don't like at all. But there were an awful lot of people who thought the office segment would take down banks, that their exposure to the debt would erode their capital base, that it would lead to bank failures. People thought the same thing, perhaps, of PE firms and so forth. And the happy news of 2025 in the office space was, even though the losses were sizable, lenders did take 8- and 9-figure losses on certain positions, especially highly priced offices in San Francisco and Los Angeles and so forth. The problems never became systemic, and that was really a terrific thing, unlike the great financial crisis where problems in subprime lending became systemic and put banks at risk. You never really heard about that. We did see CEOs go on CNBC and talk about their office exposure, but it never became more than a bump in the road for any of these. So I love your first surprise of 2025, Dianne. Thank you for that. My first surprise of 2025, I'll double down on the tariff side of things, and that was how resilient the CRE market was in the face of tariffs. In the past, after the great financial crisis, we talk about the ice age, where there was very little lending between 2008 and 2010 on commercial real estate. It was hard to get a loan. People pulled back. If you go back even further, 1990 to 1994, when the markets in CRE got very frothy and speculative, a huge pullback. Capital was not available. Fast forward to 2016, when we saw the oil bust, we saw about 6 months of really muted lending. People thought that problems with potential busts in leverage loans to oil and gas companies would metastasize into something bigger. That too led to a pullback in lending. You would have thought, given that track record, that the tariff uncertainty might have done the same thing, but we really didn't see that. Lending continued really quite functioning on all cylinders. CMBS, private equity, banks, insurance companies really never took their foot off the gas, other than maybe for a week or two. And that was a really pleasant surprise in 2025 for me. My second surprise, I would say, a little bit of the negative side, a little surprised at how long it's taking for the multifamily segment to come back. A lot of the problems in multifamily were self-inflicted. People who took on floating rate debt, buying properties at peak valuations, at trough interest rates, but locking in floating rate. I think the problems working those out have taken a lot longer than I would have expected. That if you think the peak buying season was between mid-22 and late 23, we're now really 3 years after those early purchases. You would have thought that we would have seen better price recovery at this point, more dealing with the higher inventory at this point. It's been a slog for a lot of multifamily. They're not seeing the value recovery that they wanted. A lot of the problems are still being worked out. So that was my one negative surprise for 2025.
Yeah, multifamily is certainly one to watch, and I think 2026 will be a challenging year for refis, not just in multifamily but in office. There are a lot of loans, like you said, that are taking a long time to work their way through. A lot of owners who will really be struggling to get the refi dollars that they need, and their loans are tied to assets whose current values just might not cover the loan. So, yes, it's a long, slow process, and I think specifically in multifamily, it's a challenging one and one that will take shape slowly over the next few years.
And my third surprise may not surprise anybody. The hyperbolic run up in land prices for people trying to build data centers. The movement, we've seen these land parcels in Virginia, Arizona, and elsewhere that traded maybe for 40 million 2 or 3 years ago, going for 600 million. We're seeing every big tech firm from Microsoft to Amazon to Google trying to gobble up this space, paying fortunes for this land. And I joke about it. I've said this before, that if I ever go to sell my primary residence again, I've sold a primary residence before, but if I do it again, the listing will certainly say quaint backyard with data center potential. It's been incredible what we've seen in this area. I don't think it's sustainable. I think at some point we have to see a timeout in this. But for right now, kudos to those that were able to kind of corner this land in 2022 and 10 bag it. It's just an incredible story from 2025.
It really is. I mean, data centers have gone from this niche sector to the hottest ticket in real estate. And you're right. I mean, the prices have been incredible. I remember you and I just talked about a deal in Northern Virginia that set a new benchmark for data centers of $6 million an acre. Who could have foreseen that? And at what point does the tide start to turn? Or what if technology changes so fast and they realize you don't need these big giant data centers to make those chips anymore? I can't even talk to my daughter about ChatGPT because she tells me that every time I use it, I'm killing the coral reefs.
So I could use maybe some advice here, maybe not immediate advice here, but maybe if I do ever go to sell this residence, I have some poorly maintained landscaping in my backyard. Do you think I raise the value if I replace my small lawn with like a farm of generators, right? If somebody came back and said, wow, you have 18 generators on what used to be a lawn, do you think I raised the value of my quaint little South Carolina home?
How strong are your relationships with your neighbors, Manus?
Well, that's another question altogether. They might not like the curb appeal of having these things reset once a week and re-kick themselves off and so forth. It might be, suburban, not even suburban. I can't even say I'm in suburbia. Exurban blight. I don't know. It might be in that category. I know we want to go through one more segment of 2025. So back to you, Molly.
So ending on a positive note, we will do a 2025 slice of life. Manus and Dianne, can you tell me one of the happiest moments you had in 2025? Whatever you want to share.
Well, mine, I talked about this 2 months ago. Mine by far was my daughter getting married in October down here in South Carolina. First of all, you always worry when you see somebody get married in your family, will you like that person's partner? And we were blessed that my daughter was marrying somebody who's of great stock, just very kind and considerate. And that's always your first concern. So we feel like we really won the lottery in terms of getting a great son-in-law. But beyond that, and that was a wonderful, wonderful moment, whenever you have a family event, you always hope that everybody can make it. And my 4 other children were there. All my siblings were there. Their children were there. A lot of my nieces, nephews, in-laws, friends were there. And they all brought their A game, which meant the dance floor was full. People were happy. It was everything I hoped it would be. And, I hope that everybody has a moment like that at some point in the near future. And I hope that I have more like that in 25, 26 and 27 and 28. It was just the highlight of my year. My cup so runneth over, and that was the big one.
That's so beautiful, Manus. Weddings are such special family times, and it's great to look across the room and just kind of see the tapestry of your life, your family, your friends, your kids all together in one place. So, congratulations to her and to you. It sounds like a wonderful memory.
I have to add that 99.9% of the success of this wedding came because of my wife's participation. While I was the beneficiary of a great day, I had so little to contribute. So I have to give kudos to my wife for helping make this a great day. I always leave that part out. But give me one for you, Dianne. What was your highlight of 2025? Let me hear one that was really made your 2025 special.
All right. Well, I'll follow your lead and I'll stay on the personal track and share something from my home life, which is, I think my happiest memory looking back was dropping my college freshman off. It was extremely, extremely challenging, and maybe some of our listeners can relate to this. Extremely challenging to parent a middle schooler during COVID who did not respond to learning on Zoom. And so acclimating to high school was also a struggle, and getting him placed in a college where he would thrive was struggle number 3. And so bringing him to a campus where he quickly acclimated and got recruited to the rugby team and started participating in things like a hackathon competition. He just came home for Christmas and he is loving it. And I am so grateful. And just watching him disappear into that dorm building willingly and making friends quickly was very, very gratifying for a parent.
I love that one. I'm glad your son is thriving. That's just a wonderful thing from 2025. Now, Molly, I know that you're tempted to go with the 2025 highlight was participating on this podcast. I know there are very few things that top joining the LightBox Weekly podcast in terms of just extraordinary experiences, but there's probably something else from 2025 that made your year.
Well, I have to say, this definitely makes the top moments. I've never been on a podcast before, so very exciting day for me. And I'll go with, in March of this year, I moved out of my parents' house and I moved to Hoboken from Long Island. So a lot of firsts for me this year, but that was a definitely exciting day. Moving in, no movers. So everyone in the family was involved and they were my movers. I am on the 3rd floor of a walk-up, so getting a couch up here and a bed up here was definitely a memorable and exciting day for me. Definitely melancholy, though, because I loved living at home with my parents post-grad, but I think it was time. So I've had a great year just exploring Hoboken and getting to know the city and now being a New Jersey resident. So I would say that is my 2025 highlight.
So I have to ask, I'll ask both of you this question. When you're leaving, Molly, were your parents teary-eyed or were there high fives that they get the extra bedroom back and you're kind of off the family credit card and so forth? What was the reaction? Same with you, Dianne, when you dropped off your son. Tears or happy dance?
I mean, I'll say they said they were upset, but we left with smiles and waves. Fortunately, I am like an hour away from home and I'll go home for dinner on the weekends or just to have my old couch back. But do not get it confused. I still have my childhood bedroom set up and ready for me at any point, but I need to use it. So I kind of have the best of both worlds right now.
That's fantastic, Molly. And I have found in moving, you find out who your true friends are. If you have people who show up to move you up 3 floors, those are like solid gold and they're friends for life. Manus, when I dropped him off, I was not teary-eyed. I have parent friends who definitely were, but I think excitement definitely took the front seat. And his room is exactly how he left it. We were under strict orders to not touch it.
There you go. Before I let Molly close out this segment, we wanted to thank all of our listeners who have taken part in this, have sent us email questions, have listened religiously over the last year. We love our audience. We love the interaction we have, the comments that we get back, the professional and high level of dialogue we have with all of you. We love being challenged. We have our own opinions, but we love hearing alternative thoughts out there. We wish you all a wonderful holiday season, peace, prosperity, happiness, all the best in the new year. And I also want to thank everybody who's participated here at LightBox, from Josh and his team, our producer, Molly, her first time here, Dianne, who has been a great co-host with me, her predecessor, Martha, Alyssa, Sophie, who pitched in a couple times to pinch hit, Tina. Everybody who's participated here has just made it such a pleasant experience. Hopefully it comes through. You hear us chatting, we laugh, we joke with each other, we tease. That's who we are off air as well. We love each other's company, and it's been a great year. We hope 2026 is great for everybody out there today. And with that, I'll throw it back to you, Molly, to call it an episode.
Yeah, I could not have said that better, Manus. Congratulations for another year of great podcasts. And that is a wrap on our year in review. Thank you to our production team at Bruning Media. Please join the team next week for a special 2026 predictions edition to close out the year. You can listen to the CRE Weekly Digest on any of your favorite podcast channels and send your comments or questions to podcast@lightboxre.com. As always, thank you for listening and have a great weekend.
Let's go.